I have been live streaming here on the channel every morning as I trade futures, and the thing I get asked the most every day is, have you taken any trades yet? But the other thing I get asked the most is, how do I get started trading? So I thought I'd try to cover the basics of everything you need to know to get started. A big factor is determining what you actually want to trade. There are stocks, options, futures, forex, CFDs, commodities, and so on and so forth. The country in which you live may play a role here. For example, in the US, you are not allowed to trade CFDs, which are contracts for differences. But if you have the option to trade just about anything, it's probably best to do some research on your own to see what the benefits and drawbacks are of each different type of instrument. Just go to investopedia.com and search for whatever trading instrument you want to learn more about. I usually recommend people start with shares of stocks first because it is fairly simple and straightforward. Especially here in the States, we have the largest stock market in the world with plenty of high volume liquid stocks to day trade. Once you decide on what you want to trade, the next step is finding a platform and a broker to trade on. The broker is the firm that acts as the intermediary between you and the exchange you're going to trade on. That's where you'll eventually deposit your money. The platform is the software you'll use to chart and execute your trades. Some brokers have their own platforms. For example, TD Ameritrade has Thinkorswim. Interactive Brokers has their Trader Workstation platform. TradeStation has TradeStation, and NinjaTrader has NinjaTrader. Some platforms and brokers are better suited for different types of trading too. For instance, Thinkorswim is a great platform for trading stocks and options, but TD Ameritrade's futures fees are really expensive compared to the other brokers out there, so it's not the best place to trade futures. Another reason why I think stocks are a good place to start compared to something like futures is because futures are leveraged instruments. This means you don't have to have 100% of the value of the contract to trade it. Rather, you just need a percentage of it, and your brokerage will cover the rest. Every brokerage has margin requirements, which is the minimum amount you need in your account to open a trade. As soon as your account goes below the minimum margin required, your brokerage will liquidate the trade you're in and will probably charge you a fee too. It can get a bit complex, so if you're set on trading futures, just make sure you know what margin your broker requires and make sure that you have plenty of cushion in your account to avoid being liquidated. A lot of countries have strict requirements for brokers to be regulated in their country, so I would recommend sticking with regulated brokers as opposed to unregulated brokers because they have to adhere to some standards that should protect you, the consumer. So how much money should you start with? As little as possible, because you should paper trade on a demo account before you ever go live with real money. The good news is most brokers have a simulation account for you to trade on. You may just need like $3 to $6 a month to pay for live data from your broker, so the data is not delayed and you can practice trading. Some brokerages will let you paper trade for free if you have a real money account with them, which is great too. But if you have a few $100s or even $1,000 and trade live, chances are high that you'll lose it all when you first start out. So the idea here is to trade without financial repercussions until you feel like you have a strong grasp on the mechanics of trading on your platform and a solid strategy in place that will be profitable for you. Once you are ready to trade with live funds, I'd recommend only trading with money that you're okay with losing because it is much different than paper trading. Your emotions will come into play and affect your trading because now you have something on the line. One of the most challenging elements when starting out as a trader is finding a winning strategy or system that you can actually implement. Whether it's supply and demand, ICT, a MACD, or EMA strategy, find something that resonates with the style in which you want to trade, and backtest, which I'll cover in a minute. It's very tempting to give up on a strategy if you aren't seeing results right away, but if you know it's profitable in backtesting, I'd recommend trying to stick with it and see how well you can execute it. The more you flip between different strategies, the longer it will take you to learn. Backtesting is going back in time, applying a set strategy, and noting how well that strategy performs. And this is important for a few reasons. First, it validates the strategy. Second, you know what win rate you can expect from the strategy. And third, you'll build trust with that strategy. So when you see it happen in real time, you can execute it. Now, some platforms offer automated backtesting where you can input a strategy and it will automatically enter trades on a sim account and give you the results, but I prefer manually doing it. Many platforms like TradingView or Thinkorswim or MotiveWave have replay modes. So I would go back in time, maybe 30 days to start, then play through each trading day, marking the trades I would take and noting the results in a spreadsheet. If you're looking for a starting point, I found a solid backtesting spreadsheet for free that I'll link below. After you successfully backtest, you then should forward test the strategy in real time throughout the trading day on a demo account for weeks at a time. You want to make sure that it's a strategy you'll actually be able to execute correctly and that it's something that will work in current market conditions. I would recommend having at least 1 to 3 months of successful forward testing on demo before trading with real money. The toughest aspect of trading, at least for me, is the mental side. If you are looking for some books on improving your trading psychology, I'd recommend reading these books: Trading in the Zone by Mark Douglas, The Mental Game of Trading by Jared Tendler, and The Daily Trading Coach by Brett Steenbarger. When it comes to learning about the markets as a whole, some of the best videos I've found on YouTube are from more experienced traders, and these videos tend to be a little drier, a little longer, and not so flashy, but the knowledge contained in them makes them well worthwhile. For overall market analysis, I really like the One Option YouTube channel. I'll link that down below. And when it comes to courses, I recommend learning as much as you can for free before opening up your wallet. If you want to know more on that subject, I made a whole video about it, which I'll also link right below. Okay, so to recap, you need to first identify what you want to trade. You may be restricted by what's available in your country, or you may have your own preferences based off of the risk or leverage involved, the style of trading, etc. I always think a good place to start is just with equities, so shares of stocks, not penny stocks, just mid and large cap companies. Second, you need to find a broker and platform to use. Again, the instrument you're trading, the country you're in, and the computer you have will all play a factor here. Third, you should find a strategy. Maybe it's from reading a book, watching YouTube videos, or putting together your own strategy from a variety of resources, whatever. Fourth, backtest the strategy and track the results so you know what to expect when you put that strategy into action. Fifth, put that strategy into action in real time, but on a simulation account so no real money is at risk. Sixth, if you can trade that strategy successfully for at least 1 month, 3 would be even better, you could consider depositing money with your broker, but make sure it's money you'd be okay with losing because trading is really difficult and incredibly risky. Seventh, profit, I guess. I hope this gives you the basic framework on getting started. Trading is a huge time investment. There's a lot to learn, but I believe if you have the work ethic and dedication to develop the skill, it is something that can be worthwhile. If you want to hang out with me during the morning New York session, swing by my channel and watch me trade live on weekdays. That's all for this one. I'll see you in the next.